Okay, if you've watched the previous videos, you will notice that I had a break-even trade right here. The break-even trade was quite a painful one because of we were so close to our TP, but I chose the mechanical system, right? If you are trading a different system, or you have your own trading plan, you could have a plan where you could take your profit based on many other factors than having a rigid trading system. For me, I had a rigid trading system, and I was not willing to go against it in any way, right? Now, if you were trading a normal system, and maybe you're trading ICT, SMC, there could have been reasons to exit this trade, right? I took my time before, and I went to the 4-hour time frame. I checked something there, and I noticed that we were in a very serious level of support, right? You can see that resistance rather. So you can see we had a very strong resistance around there. Okay, so based off that, that would have been a good reason to have exited once the market started playing around that side. But here's the thing. Okay, so you can see I would have exited at that point. You see how much we were in that line. Let me do this. So you see how much we were within that line. So we were within that space. So this area would have been very great for me to just have taken my profit, but I chose to work with a mechanical system for the time being. Now, after the first 100 trades, I will most likely make adjustments to what works and what does not work. And I'll just see how many losses I've been able to have. What are the things that made me have a lot more loss than probably profits, or what made me have more profits than probably loss? And then I begin to figure out what are the things that make me consistently profitable, what are the trades that make me profitable, and I want to make sure I double down on that. So that's the idea. All right, starting off mechanically and then seeing how well we can tweak it along the line in such a way that it doesn't mess up our minds, right? One of my friends asked me one time, and it was like, making use of a risk reward ratio of 1 to 2 or 1 to 3, which is better? I told him, well, you can work with your own system, but as much as possible, you want to make sure that you have a defined area where you want to take your profit. Now, you don't want to give your mind the opportunity to make choices while your trade is on. You are most likely going to make impulsive market moves, right? You want to, as much as possible, have a definitive system where you take your trades, where you take your entries, where you exit a trade. Because once you do not have an exit criteria for your trades, you are most likely going to close your trades anytime the market compels you to by emotional impulse, and you don't want to be in that that frame of mind. So having a mechanical system is really good. So if you're making use of a 2.5, if you think your trades does not get to 3, risk reward ratio of 1 to 3, you can work with 1 to 2.5, or you can work with 1 to 2. That gives your mind that flexibility of knowing that this area is where I'm taking off my profit, and you don't have to start thinking about what to do, whether you are right in doing what you are doing or you are wrong by taking a profit where you should not have taken it. All right, so we had a loss on Tuesday. Then on Wednesday was FOMC, and unfortunately this trade got stopped out before the FOMC release. Yeah, so that was a little quite painful, but not too painful because we are following a trading system, and we are following a probabilistic system, right? So then we had Thursday we took a trade somewhere around here. Now if I come to the 5-minute time frame, let's go to the 5-minute time frame, right? So the 5-minute time frame, when I took the trade, there was this consolidation here. right? There was this consolidation, and of course, after losing two trades prior, which was on uh, Tuesday and Wednesday, this looked to me like probably we may be having another loss. You know, I've said it before, losing out on a trade the previous day, if you want to really trade consistently over a long period of time, you want to be even more conscious and cautious of the day before, the day after a loss that you have had. Okay, so if you had a loss on Wednesday, be careful how you trade on Thursday. If you had a loss on Tuesday, be careful how you trade on Wednesday. You want to, as much as possible, fill your mind with everything psychological that can keep you stable the next day. Because I can tell you the fact, the next day you could also lose. And if you lose the next day, while being optimistic about winning that day, you might lose it. You lost on Tuesday, and then you said on Wednesday, I will make up for what I lost on Tuesday. It may not turn out that way. And since you have put your mind in the frame of positivity or optimism or expectancy, I think that's the best word, you are most likely going to get from that point of expectancy to the downhill of disappointment. And this is where people blow their accounts because they are expecting much, and what they saw was totally different from what they are experiencing, and they blow up. All right, so you want to be very cautious and be careful when you have a losing trade, and there may be some losing trades. Okay, so this trade got to me a little bit, but I was being careful and I waited that trade out. And then we saw this strong push downwards, and then as the market started pushing upwards, I was like, wow, I think we are going to have another loss again today. Well, fortunately, I held on to that trade, which of course I always do. And then we pushed down somewhere around here and then started pushing up again. I was like, what's going on here? And seeing the experience that I had on Monday, that the trade almost did, that the trade did this, I was like, well, if it happens again, probably I'll be in a better psychological and emotional state. Yeah, we had our final win, and this was the first win for the week, and it was quite a good one because on Thursday, having risk reward ratio of 1 to 3, was able to cover up for the last three trades, the last two trades rather, because on Monday I did not lose a trade. So it covered up for Tuesday and Wednesday, and even covered up for the loss of Friday. All right, so then this was Friday, and then we also lost on Friday as well. Friday's trade was quite quick, quite quick. Well, I prefer losing trades quite quickly than trades that play around my stop loss and just make me just look at the chart and waste my time. All right, I try as much as possible to spend a little time on the chart so that I'm not becoming illusionary. When you spend a lot of time on the chart, you begin to see things that are not there, and so you want to avoid that as much as possible. So when a trade hits my stop loss quite quickly, if it's 1 hour after my entry, since I take only one trade per day, I end for the day and I go about my day. There are some things I can do. I could probably read my books or get something else doing. Yeah, and that gives me some sense of sanity and also a sense of purpose as well. So as much as possible, you don't want to be so attached to the chart. You want to detach as much as possible so that you are able to get the most out of trading. All right, I hope this helped you out, and I'll see you in the next trade.